I love Acorns. I know Acorns, man, I've gotten a lot of like, you should do this, you should move it to that. Why are you using the fees? Here's what I think about the fees. This is how I justify the fees, the subscription fees. So just to give you a little background, Acorns charges a subscription fee per month to their users. That's how they kind of stay in business. It's $1 a month for every different type of account. So now they've kind of rearranged it where they have packages. They have like the investor package. I don't remember what it's exactly called, but it's like $3 a month. So with that, you get an investment account, an IRA, and a checking account. Okay, $3 a month, you get those three things. Or they have like the family account, which is those three accounts plus a kid's investing account where you can invest on behalf of your kids. Cool, so that's $5 a month. Okay, here's the thing. I personally pay $2 a month because I have a brokerage or an investment account and a IRA. Now that is a fixed cost that I will pay every month for the rest of the year as long as I have an account with them. Now, the way I justify that is in the fact that I no longer have to rebalance my portfolio at the end of the year like most people have to if they have their portfolio set up with a Fidelity or E-Trade or a TD or maybe even a Vanguard. Those platforms are trading platforms upon which you construct your portfolio, and then you have to rebalance it. But what do I mean by rebalancing? Let's say you have a portfolio that is going to be 80% stocks and 20% bonds. So that's the split. So now you put in your money at the beginning of the year, January 1st. You start investing every month. The stock market does what it does. It goes up and down, up and down. The bond market does what it does. It goes up and down, up and down, up and down. Now at December 31st, the end of the year, you realize that your portfolio right now is now 90% stocks and 10% bonds. But your split is supposed to be 80-20. So now we got to get back to that split. In order to get back to that split, what do you got to do? You got to sell some of your stock holdings at profit, take that and then buy more bonds. So now we get back to the 80-20 split. Okay, so now what happens when you sell those stocks at profit, a little bit of it, at profit to regain that balance? Well, you got to pay capital gains. Capital gains tax is a percentage cost. It's a tax. Get what I'm saying? Taxes are a percentage cost. These subscription fees are a fixed cost. The beauty of a fixed cost is that no matter how much money I make, I just have to pay the $2 a month. And I don't need to rebalance, because the way the algorithm works on Acorns is every time I put in money, they maintain my split. Let's say it's 80-20. They maintain my 80-20 split. I don't need to rebalance at the end of the year. Now, Acorns has another feature, which is the Roundup feature, which is where they round up your spare change to the nearest dollar and then invest the difference. So let's say I buy something for $2.50 and I buy it on my credit card, and my credit card is linked to my Acorns account. So what Acorns will do is it will round that $2.50, an extra 50 cents up to $3, and it will take that 50 cents and then put it in like a little pool on Acorns. And then eventually that pool grows and grows and grows until it hits maybe $5. And then that $5 gets invested into my portfolio. Now, here's my honest opinion. If you're gonna download Acorns solely for that feature, it's not worth it, because that's where the fixed cost of the fees come into play, and they make up a larger percentage of the fees that you will pay. So let me clear that up. Let's say my roundups on the monthly adds up to $20. I have to pay my $2 subscription fee. So that means I'm investing $20 a month based on roundups, and I'm paying $2. That's like 5% in fees every month. That's very high. That's not worth it. But if I use a roundup feature plus the regular investment feature where I just put in money, I can put in money, and I put in $100 altogether a month, then that $2 becomes a 2% fee. Still kind of high, but it can go down as I increase my monthly investments. That's how I use Acorns, and I think that's how it's most useful to its users. Use the Roundup feature and use the investment feature. That's just my 2 cents. So Acorns is worth it if you're a passive investor that's going to aggressively invest money beyond just the roundups into your Acorns account. So all you really need to understand with investing in Acorns is index fund ETFs. And you can learn that by reading John Bogle's book, The Little Book of Common Sense Investing. It will teach you literally everything you need to know about index funds and index fund ETFs. That's the complete rundown of Acorns. Hope that helps. If you like that video, drop a like, drop a subscribe, click the next video in line, upgrade your financial literacy to upgrade your ownership, and so that you can have more power in your life. Stay tuned for next week's video. And as always, happy investing, you sexy